Hello, everyone. Thank you so much for joining us for another weekly wrap-up. My name is Jeremy Kronemeyer. I'm Operations Manager for Wickham Financial Group. And I have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, what happened in the markets?
Yeah, thank you, Jeremy, and thanks for our listeners jumping on the call. Last week we really saw the S&P, the Nasdaq off about 1%. The Russell 2000 was pretty flat. That was led down by technologies, again off about 3%. Oil, that was down about 3% after we saw Israel's limited retaliation on Iran's attack. Now, if we look at Treasury yields, they rose a bit with some disappointing GDP number and job data. We've been seeing those yields pop up a pretty good bit. And that might be an understatement here. But we did see the Q3 gross domestic product come out at about 2.8%. That missed about 3.8. So that would give us maybe a hint that the economy isn't overheating by any stretch, but it's cruising along, pretty consistent. We did see consumer spending increase about 3.7%. One thing that kind of spooked the market a little bit was this employment number. We saw non-farm payrolls rise only 12,000 in October. That missed, I think it was 120 plus thousand, which was expected. On the unemployment side, we did see that come in pretty steady at about 4.1%. Keep in mind, you really don't see recessions when unemployment's at 4.1%, which is really low. If we look at the Federal Reserve, we got the employment data suggested. They're still on track to do their 25 basis point ease. That's coming up here this week, and then they'll look again on the next step for December. If we look at inflation, we saw the PCE price index rise about 0.2% month over month, but year over year, that inflation number was 2.1, and that's tracking right towards that Fed target of 2%. So we got inflation coming down, we got some reasonable growth, and heck, we're right in the middle of earnings season right this week. So if we look at some manufacturing numbers, we did see the U.S. manufacturing activity contract a bit with the ISM, the PMIs, at about 2024 low of about 46.5. Consumer confidence, that saw its biggest jump since March of 21. If we go overseas, we were looking at some interest rates unchanged for the Bank of Japan. China, they were looking at their industrial profits. Those dropped a bit. Europe, their gross domestic product did grow in that third quarter about 0.4%. And we did see some weight, some pressure on stocks and bonds and the overall pound over in the UK. Now this week, election week, big week, setting the tone for what we could see and maybe some headline volatility. We also had the Fed coming out, anticipated to drop 25 basis points, and earnings. That's what's really driving this week. And keep in mind, whatever we feel might happen with the election, the stock market's still going to be driven on earnings. And if we're seeing the earnings beat and raise, and we're seeing those growth in earnings that the market would like to see, stocks usually tend to follow, not trend to follow, but that's true. If we look at the U.S. economic data, when we look at the 10 and 30 year and that auction, we want to see the appetite for that. Then we'll get into some economics numbers overseas with the Bank of Australia. What are they going to do with interest rates since they got inflation near that 4% range? Bank of England and China, we'll be looking at some of their economic numbers coming out. Jeremy?
Gotcha. Well, Graham, I know it's election day, and happy election day to everyone out there. But what do you see the markets doing today and then around the election?
Yeah, if history is any guide, and we kind of look back since 1928, we've had about 24 elections, and how is that, or how is the S&P average during that week of elections? Well, it's up about 0.7% on average, and that gained about 63% of the time. Now, if we go a little bit further and we say, okay, 8 of the 10 elections that we've had over the past 40 years, listen, they've been up days, averaging about 0.9% the day of the election. I just looked at the S&P. It's the day of the election, and we're recording the call for last week's performance. Market's up just over 1%. Don't know if it's going to finish there, but it seems to be trending a bit like the past. Now, let's go even further, and let's say, how has the S&P done in non-election years compared to presidential election years? it's been a slight outperformance. Non-election years, we're looking at the markets up since 1928, up about 5.2% on average. The presidential election years was up about 6.25%.
And Graham, what do you see going forward, after the election?
Yeah, and thanks for bringing those slides out because we just got done doing our webinar, and we were talking about three core things that we need to address in the market. That's geopolitical events, the election, and interest rates with the Federal Reserve. And if you look at it, if we look at 6 months before or 6 months after, listen, the market's up. But if you really look at 6 months after, and you look at U.S. large cap equities, which I think the S&P would be represented more in that area, that was up 7.8%. It doesn't matter if it's bonds or whatnot. It looks like the market has been up. The other question that we usually get, and I think we have a slide for this, Jeremy, is how are the markets generally done depending on a Republican or Democrat, a split majority? Listen, keep in mind that it's 64% of the time, and this is history, just looking back, 64% of the time, we have a split government. So the market kind of likes that. I'm not sure if we're going to have that this time or not. I think the odds are probably leaning in that direction, certainly if history is any guide. But it doesn't matter, Republican or Democrat. And if we are a split, listen, the market's up. The real key is going back to that earnings statement I made. As long as earnings are there, stocks are going to follow. And it looks like that still seems to be the track and the trend here.
Gotcha. Well, Graham, we always appreciate the insight and the information. And to our listeners, if you want to go check out some of our previous weekly wrap-ups or our webinars that Graham mentioned, go check out our website, our social media pages, and they're all there for you to look at there. So we look forward to seeing you next week, and have a great election day.
Take care.